Welcome traders to another video. This is going to be one of the most important videos that's going to be able to help you in terms of strategy and what you can use to make your first millions and so on. So what I'm going to be deleting here is the data for previous video. We talk about how to use economic data events to be able to trade using the tier 1, tier 2, tier 3 data, liquidity engineering, also the three phases of news move, and how to use calendar trade professionally. We talked about this specifically in gold, whereby I talked about when the dollar is bullish, expect gold to go down, and when the dollar is bearish, expect gold to go high, and so on. So in this video, I want us to talk about a very simple strategy, and most people have violated this strategy. They don't really teach it the way it's supposed to be taught. This is an ICT concept. I want to make it very clear, but I do have a deeper understanding of it, of how it's supposed to be working properly. Uh, it's way different with the way I used to trade it 3 years ago. So first of all, I want us to continue from where we left from on XAUSD market commentary before I dive into the strategy. On previous analysis, we talked about this specific area, and I told you guys last week on Wednesday that if we fail to close above this level of this bearish, fair value gap here, we were likely to drop, and exactly that's what happened, and that was on Thursday. As you can see, these drops have been happening on Thursdays. This was a Thursday, this was a Thursday, this is also a Thursday. You guys can see that, okay? So the reversal Thursdays have been in motion recently very, very well. So even tomorrow, the same thing might happen. So I'm not expecting tomorrow maybe to force to go down. If we go down today, tomorrow we might end up going higher, but I'm not sure. And if we go higher today, tomorrow we might end up going down, depending on how today is gonna close. Okay. So depending on how today is gonna close, I want to take a look at what's happening here. When we began this week on Monday, I marked this DSL and the D and H and the DSH. This is daily swing levels. Okay, and on Tuesday, which is the manipulation Tuesday, we took the um, Monday lows, ended up displacing below it, showing that we have interest in going down. Then we ended up taking liquidity on this specific swing low here, daily swing low. But take a closer look. I want us to mark this properly. We ended up violating, oh wait, yeah, we violated this swing law. It doesn't matter how little, but violation is a violation. I want you guys to take a very close look. I'm zooming in, I'm zooming in. You see that? We violated. So these simple details, I mark them because they're going to help us to know what exactly price is interested in doing today. And apart from that, we displaced below the previous day what? Candle, as you can see that. That's displacement. So there's a possibility today we might end up creating a gap right here. So it's going to be a gap inside a gap. This shows a strength in terms of price wanting to go lower. We're going to be having another gap here, a bearish one. You guys can see that. I'm just thinking we are likely. I'm not saying that now we're going to be like this must happen. So if we end up having a gap here, then tomorrow we might just end up filling that gap, then dropping lower, or just dropping lower. And when you're dropping lower, where are we going to, guys? We're going to be tagging this low and this low. The low that I would like to be touched is this one. You see this one here? This aggressive one on the other week that really did a lot of damage. This one, I would like this to be touched. So gold is just trying to do its stuff here before we go back to all-time highs again. Okay. So that being said, I want us to dive into the analysis or the strategy that I want to talk about. This analysis works way better if you understand the narrative on the higher time frames. For example, you understand the daily bias or session bias, and there's also an indicator I'm going to be using. It's available. You guys are going to see it, and you can be using it as well. So over here, we already have interest showing that price is likely interested in going lower, because even the way we closed within this range, you see this bearish gap that I marked here. You see up here we were respecting it, but now down here we've had a displacement below it, so meaning that we are likely to go lower today. So I want us to, I'm going to remove this marking of this gap I was marking, because this day has not yet fully formed. We are still on Wednesday. Wednesday is not over. Until it is over is when we're going to be opening the markets, maybe tomorrow, very early or late night, or when the new session, Asian opens up of the next day, we see did we create an imbalance over here? Then we're gonna see how price react from that imbalance. Okay. So if once you have understand this overall narrative of what's going on in the market from higher time frame, now you can move directly into 5 minutes time frame. But sometimes I like maneuvering around 1 hour because 1 hour is also very important. It usually just give me more confirmation to know exactly what price is up to. Okay. But when I take a look at 1 hour, I'm seeing some bullish fair value gaps. This one here is kind of against the sells if we were to engage sells. So alternatively, once we are seeing this is what's going on here. Okay. This simply means that if today we end up not taking this low, if today we end up not taking this low, meaning that we close within this range, then there's a possibility of us going higher. But for us to go higher, we look for PDRAs, bullish PDRAs for us to take us higher. So going back to hourly time frame again, I just like to understand the narrative, what's really going on in these markets. Okay. So for example, right here, we took some liquidity over here. This was yesterday, Tuesday. And as you can see, this candle, the wick did the damage. The body closed back in. And as you can see, we ended up just consolidating through that zone. It's the same thing I've been telling you guys, even before this drop, even this one here. It's the same thing. This candle here did some damage over here. And now after taking, for example, doing some damage over there, the next candles just ended up closing back in, meaning that it was preparing for reversal, which ended up filling this bearish gap before it went lower. And it's also the same thing here. This major drop that happened, where was it? There was this serious drop that caused all this. Yeah, this one here. The same scenario. This one. So the next series of few candles ended up closing up, back in, and this was a sign that market is preparing for something. So after creating this bearish one, enter from there, but then we go lower. If you missed it, you wait for retracement, you go lower. And it's the same exact thing going on right here. Let me show you guys. Let me show you where we are right now. It's the exact same thing happening right here. So we have this candle taking the damage, okay, doing the damage over there, and we have a series of candles actually over half a day, just playing around there. Okay. So if we decided to grade, this very specific level like that, we see price wanted to tap the zero point 0.5 midpoint over here, and you can see price has been playing well within those levels, right? So after we confirm that, then we have another confirmation. You have these bullish PDRAs. You see these ones, they tell a story. We're not supposed to ignore them. We have this bullish daily hourly fair value gaps work day today. So whatever market is doing right here, it may be just wanting to tap these caps here before you go higher. So we have that in mind. Okay, good. So when you now move to the real deal or real now strategy, which I'm talking about right here, is this. You guys can see this is an ICT kill zone strategy. We have the Asian, London. I'm using UTC plus 3. If you're using UTC or a different time zone, ensure that you're using this indicator because it is built with custom. It is built with custom, you know, time zone that aligns with the United States time frame, right? But me, I use UTC plus 3. So as you can see, London, Asian will begin at 4 a.m. in the morning, and it's gonna be ending at 8 a.m. in the morning. Then we're gonna be having London, which is gonna be beginning at 10 a.m. in the morning, and now at 13 p.m. or 1 p.m. Noon. Okay. So that being said, you mark these liquidity points. So for example, I want us to mark these Asian highs. So these Asian highs, you wait for price to attack one side of liquidity, then you target the opposing one. Okay. So for example here, market came in, and this indicator is called ICT kill zones. If you go to trading view, just go here, search for indicators. write the term ICT kill zones. You're gonna find a lot of them, but make sure that they align, that they don't give you something else. Because some people, nowadays you have a lot of people teaching things that are not, not really correct. Okay, so we have this one here, right here. So this is a liquidity project because you can tell how the candles are respecting, the candles body are respecting this specific liquidity area. So this is a liquidity graph. So after taking liquidity, what we're waiting for, or for what a lot of traders usually do, they wait for a breakout structure where you can mark this very specific low here. So you wait for a candle to displace, leaving a gap, which will we had a series of bearish gaps right here. Okay. So after having a series of gap, and apart from that, you can as well even use this. This is a breakout structure. This is valid. Even this one here, this is a valid breakout structure. This one. So this one was even better because you had that displacement of that candle creating a gap toward that structure. Breakout structure is different from liquidity grab. I'm gonna be doing another video about this because that's a very serious and very important concept. You need to know how to differentiate between a breakout structure and a liquidity grab. This one here is a liquidity grab. This is not a breakout structure. This you're seeing up here. Some people will say, we created higher highs because this is a recent high. So we created higher highs. So they're going to say we're still going higher. But they're thinking wrongly because this is not a breakout structure. This is just a liquidity grab. The reason why I'm saying that is because of the characters of the candlesticks, and the wicks, the body and the wicks. Open high, low, close. Open here, create that high, closed here. Open here, created that low, no, created that high, we took liquidity, then create that low, closed back in. So we only have a wick here, so the body is below. Okay, that's way more advanced. So I'm gonna be talking about that in the next video. So continuation of what I'm talking about, we have our breakout structure right here with a fair value gap within that range. So what you do as a trader, you come and look for longs because the we've taken the buy side liquidity. So we're targeting the sell side. But with this strategy, I want to teach you guys something that you don't become greedy because most people usually become greedy. They want more and more, and that's how they usually lose money. Just target at least 1 to 2 or 1 to 2.5. 1 to 2, 1 to 2.5. Let's say 1 to 2.5. Okay. If target 1 to 2.5, there we go. You already had it. So you are just supposed to be selling from that very second candle, this one here. So apparently, this is what it was supposed to be looking like. But if you understand what a displacement candle is, for example, this displacement created another displacement gap. So meaning that we're not expecting for this gap to be fully filled. We'd like it to remain unfilled. We just enter from the next, once price comes to this very level here. On the high of the gap of the candle that created that gap, that displacement gap. Then we sell below. And as you can see, this was delivered. Right now, I want to give you guys another example right now. We have London session. First of all, you mark the liquidity. We have the sell side. We have the buy side. I understand that we do still have some Asian liquidity pressing below here. But let us work with what we have. Sometimes if price is too bullish or very bullish, it might not be interested in coming back down here. It might not, because if it is too bullish. So if you're selling here and you start becoming greedy, you want to until this very specific level, this liquidity to be grabbed, my friend, this is not about what you want. This is about what market is doing. Okay. So what we do is that we just follow price. That's what we're doing. So we have liquidity being grabbed here. Okay. So after this liquidity being grabbed, you just don't enter immediately. You wait for a breakout structure. Breakout structure, we mark this very specific level right here. Some people would mark this very level here. But you only mark this level if price had not yet, given you that. So if, for example, I hope you guys are seeing what I'm doing. If price was right here, you're going to be marking this. But now, since we created some new structure right here, we're going to be marking this. So on 5 minutes time frame, we wait for a new candle to displace above this very high, creating an imbalance. Then we're going to be using that imbalance to enter as we target at least 1 to 2 or 1 to 2.5 R. It is as simple as such. Let me give you one more example of the previous day. This was previous day. Okay, so let's assume we wanted to trade these from let's say assume we want to trade New York. Okay, so when trading New York, we're gonna be marking the London liquidity. We have the highs and the lows. So you ask yourself a question: what's going on here? Apparently, we had taken the buy side liquidity of London. We had a break of structure right here, and you have that displacement. So all you have to do is wait for price to come back towards that level, which it did, then sell with your stop loss above that candle that caused displacement, because now you cannot put your stop loss right here because this is very aggressive candle. We would not like it to we would not like this one to be displaced, like being touched, because it's very aggressive. So you position yourselves from, let's assume this level. Stop loss is just going to be above here. Then you're targeting 1 to 2 or 1 to 2.5. You already have it. You see that? This is based on liquidity grab that happened over here. We had a break of structure, retest of that zone. You sell it. Now, assuming that liquidity had already been delivered over here, and now this was a more of a hourly swing low, or a liquidity. There was a liquidity over here. So assuming that liquidity has already been purged over here, so what are we waiting for? We want to see price going higher. So given that these are good liquidity sweep, because you see the wicks have done the damage. So what we would have done here in this scenario, we were waiting or looking forward. Um, what is this level? I've marked a level here. I would like to touch it because it might be an important level, but I hope it won't confuse you with my markings. Just pay attention to what I'm doing. So in this scenario, we would have marked, for example, these highs right here. So when we displace above these highs, we're going to be looking for a gap that displaces, then we buy. If you take a look at it closely, we literally not have that displacement until the next day. But there's so many ways to attack this. There's also this one here. You can use this one. So wait for displacement. Unfortunately, yeah, we had some, move above it, and we had this, this gap right here. Yes, this one would have worked. So when price comes back down here, as well as even this one, and we created, this one was even good because we created that gap. So price came back in here. So what you're supposed to be doing as a trader is entry on this gap. Even if you put a buy limit, your stop loss should be below this low, this one here. But even if you put it below this one, it's still good. So you can decide below this one is the safest, but right here is also good. Okay. Then you're gonna be targeting, as usual, 1 to 2R or 1 to 2.5. Let's see, 1 to 2.5. You see that that's a win, guys. The next day opens, we drop down there, gives you entry. We were never violated. Price goes on to deliver. Same thing. So just hunt for liquidity. That's all you do. And now you come to today, the same exact thing. So right now, what's going on right now? I would like to see, I would like to see a candle displace its body above here, this level, and with a fair value gap, then I'm gonna be putting, if I get that displacement as of now, this is how it's gonna be. If this gap is, for example, somewhere here, that bullish gap, I'm saying if this happens, it hasn't yet, we do not even have breakout structure right here, then I'm gonna be targeting something like that, maybe 1 to 2 or 1 to 2.5, like that, or maybe 1 to 2.5. Okay, just like that. But if you're very sure you have understand the daily bias, then you can target this other liquidity point for maximum returns. So that's it for this video, guys. Hope this was helpful for you. I will be able to make more videos to help you guys, study price and so on. So make sure to like, subscribe. See you in the next one.